All right, you guys, cool. So new week, last week being NFP and just being a super, a lot of news events and just a super, super heavy news related week. We are looking at another very heavily related news week. I sent out in the chat if you guys saw in the Discord. I don't know where it's probably in the announcements, just the new trading times because it was daylight saving, so everything went forward. Everything went forward an hour, right? So now we're looking at, instead of London starting at 3 o'clock like we're used to, London's now starting at what's it called? London is now starting at 4 a.m. One second. All right, cool. So London is changing at 4 a.m. now, right? London is 4 a.m. Eastern, 1 o'clock Pacific. New York is at 9 a.m. Eastern and 6 o'clock Pacific. So just note those changes and whatnot. Now we got news events this week. Tuesday, we got GBP and USD, which is tomorrow morning. We got GBP and USD. Wednesday, USD, GBP, AUD, and NZD red folder. So it's going to be active all around. Thursday, Euro, and Friday, USD. Those are just all the red folder news for the week, right? So
New York Open is still at 9:30 or
yeah. New York Open still at 9:30. Okay, cool. So New York Open still at 9:30. London session is just the only session that's affected with daylight savings and us. Okay, cool. So just going into honestly like what we should be doing, going over our basics. I know we haven't been on a call in a minute, but it's nobody that's new here. We've been doing the same thing for a while now. It's really just, even for like myself and everything, it's really just redefining, not even redefining, but just being more precise, being more accurate, more what's the word I'm looking for? Just more selective, right, with our trades and just getting in the right trades and whatnot, and not just trading the trade. So looking at the chart right now, we should have a good idea of what we're looking at as far as like our institutional levels and then our moving averages. Now, I know a lot of people might not be a fan of the moving averages, but I do think they make a lot of big help when you're using them the right way with your trading and whatnot, right? So if we're looking at like GU, when I'm looking at GU now and I'm looking at GU, let me look at a blank screen real quick. When I'm looking at GU and I look at the 4 hour and I look at the one, I look at the daily, I am pretty upset about this one because we could have been in this trade. I mean, we were in this trade all the way at the bottom, but it did like a nasty stop hunt in the middle of the night or something, and then it's up over 360 points from that, from that point. But more so of looking for, what we're looking at with GU going into the future. I'm still very bullish on it. And even more reason I say that is because if we look at the EMAs and we look at the 1 hour, and I want to just get rid of the bank levels in the back, but at the same time, we want to tie those in and never forget about them because, in my opinion, they're the most important of everything, right? But now when we're looking at our movement averages and we just start tying things in, what do we see happening over here with GU was we got the 5 and 13 cross. Now, a lot of people aren't fans of the 5 and 13 because they're just so close and they're the smaller moving averages. But they're more, like you said, they're just more so for those entry and direction. But if you just like using the overall trend moving averages, then you're going to stick with the 50, the 200, and the 800. That's, that would be the 3 combo that I would use as far as, looking for your entries and just dictate more, not even more so looking for your entries, but more so dictating, the trend in the market and whether the market is bullish or bearish. So if we're looking at this, the 50 is the baby blue, the white is the 200, and the dark is the 800. Now, when we're looking at this, we get this crossover here, and this is the most important part. I love the 1 hour time frame because that's just going to tell us the overall direction of the market and give us good entry points. Now, what that little trick that we like to do is when we see a cross on the H1 or H4, you want to go and put that box on your screen. You want to put that box, go and insert objects, whatever it may be, and just put a box on where you see an EMA cross or where you see the candlesticks crossing over the moving average, like in this instance right here, right? Now we go more in depth on that entry and we go more in depth on that entry. That's when we go into the 15-minute time frame and we start looking for, okay, potential entry points, potential entry points and where we can take this trade at, right? Now, obviously, when we've been looking at GU for the last couple of weeks, it's been harder to find a great entry as far, the entries last week were harder to catch because When we're looking at this, a lot of the times we're going to want to see some type of pullback and then get that move back to the upside and then take that. And then same thing on this day. Wanted some type of pullback back down to take it back up, but it never did that. What do we see? Pretty much it did the whole time was it did give a bounce off Asian mid right there, which is if we came all the way down to the 5-minute time frame, and let's find that purple. There it is right here. What do we see happen right here on the 5-minute time frame when we're looking at potential entries? Now, keep in mind, this second box starts at London session open. So if this is at London session open and you're looking at your chart at 3 o'clock in the morning, what would you do at 3 o'clock in the morning with GU right here? What would you be looking to do if it comes and it bounces and it's bouncing at this 50 on the lower time frame, or the 200? Sorry, the 200 is the white one, but it's hitting our moving average right here, and it's hitting this Asian session mid. Now, like we stated, right, if we go to the 1 hour time frame, we can see all that's happening inside this area is we're starting to see this flip over on the moving averages. The market starts going bullish. And then this is when you start using your moving averages as targets. Because if you did take an entry somewhere right here, and this is when the 5 and 13 come in handy, because we see that the 5 and 13, red is underneath yellow, ketchup is underneath mustard. The 13 is underneath the yellow. What do you see right there? That would be our signal for what? A STT, which is a short-term trade. So if you see that 5 and 13 cross, even though you haven't crossed over the 50 yet, you see the 5 and 13 cross on the higher time frame on like the H1, and you're potentially getting that bullish momentum right there. And then you come and you bounce down to the 5-minute and you're looking for entries during London or New York. You know that on the 5 and 13, on the H1, that your 5 and 13 are showing bullish. So when you get the 5 and 13 showing the same thing on the 5-minute, what are you going to do right here when you're getting this cross to the upside and you're getting this rejection going into London Open? Are you going to look for a buy or sell with GU? You look for a buy and you put your stop loss where at? Underneath that low of the day, coming between 5 and 12 o'clock. And those are those instances of where, you might be expecting that stop hunt. And sometimes it's just about, trusting your trade, trusting your setup, and, trusting your, whether you want to call it strategy, style, whatever it is. But just kind of trusting, what you're looking at, and that you get in a trade, you might lower lot sizes. And then as you see the bullish momentum coming in, then you enter one more time and then you let it play out, right? And where you're going to take this trade to. On the 5-minute time frame, on a smaller time frame, you're going to take it back up to where? You're going to take it back up to the 800 moving average on the 5-minute. But then when you start to zoom out, on your chart, what do you see on the 5-minute? That second purple box that we just marked right here, what is that on the 5-minute? There's no moving average right there on the 15. We can see that the dark blue, the 800 is all the way up here, right? So if you got in a trade somewhere down here, you might be holding it short term to this level right there, because that's where your moving averages are showing on a smaller time frame. But on a higher time frame, you'll be like, oh, well, I might want to hold this up to my dark, my stronger EMA. And then what happens is the market slowly but surely, it gravitates and it reaches up there. And then what do you have happen the next day? It flips over and then it goes bullish for the rest of the day without ever really giving any type of real pullback. And that was Thursday and Friday. And then, this is, market open everything today and whatnot. But what do we see happening today is just it's the same what? Carrying over from last week. It's the same bullish momentum carrying over from last week. It just has been gradually creeping its way up. And tonight or this morning or last night, however you want to kind of look at it, it gave out some potential re-entries last night or this morning going into New York session. When we look at the market over here and we see that it hit this Asian session. It hit this Asian session low right here during London last night. It really wasn't too much to do last night during London. If you did do anything, you might have took a short based off what your moving averages were telling you, but you didn't trust that trade too much because it was just consolidating for the whole day. Sunday is always typically, if it's a slower day during the week, it's always Sunday. So, and you just want to let the market set up for the week, or, at least for the first session of the week. So then what do we see happen, though, is it does end up gradually dropping down through the night, drops down, fakes the pull up, drops back down. Then what do you see happen after it goes and hits that low? After it hits that low, we've already crossed underneath the moving averages. Bam, bam, hit that. Now it looks like it wants to start reaching towards the 800. But what do we see happen right there? We see that the Asian session low gets taken. We're on the 5-minute. You might be more comfortable just looking at the 15-minute. And it's the same thing telling us here now what? The 200 and the 800 are signaling to us that it's still a bullish momentum, it's still a bullish trade. You might get a pullback to this area, but you're still looking for, you're still looking for buys. And we end up getting the stop under that low and it buys up. What do we get right here again? Right back into the strategy, right back into the strategy, whatever, whatever you want to call it. But on the 15-minute time frame, what do you see? On the one, even on the, you look at the 1 hour, on the 15, what do we have? Moving averages crossing right there. So if you see your moving averages potentially crossing, whether it be right there and you look at it, or, you're looking at it on a bullish perspective and you see your moving averages crossing back right there, then you zoom out, look at your 1 hour, and what's the 1 hour telling you? Is the sell on the 15-minute going to be stronger, or is the buy on the 15-minute going to be stronger? The buy ends up being stronger, and that's that trade that would have been that second one to the right after it came. And look at your 1 hour. It's the same, it's the same thing. If we look at the 1 hour and you put your box at the 800 on the 1 hour, what did it hit on the 800 or on the smaller time frame? On the 15-minute time frame, it hit the 800 moving average on the 1 hour if you were looking at the 1 hour. But on the 15-minute, it didn't get that far. But that's why it didn't get that far, because it hit the 1 hour 800, bounced, consolidated at that for a second, and then that's where it bounced up off of. So we see that right there, right? You see, we see that bounce right there at the 800, consolidates, takes out Asian low, and then you get that push to the upside. And just that push alone, was, 100 pip push. What's good?
Hey, I was gonna ask you, was that little wick right here on the lower time frame? Would you consider that like a turtle soup right there? Would that be a turtle soup?
That's all it was. Stop under the Asian low, turtle soup. It didn't fully drop underneath and clear it, but it just hit it to where it took out the liquidity in it, and then it traded back to, traded back up to the upside right there. So that's how, that was GU this morning, right? So I mean, even looking, like I said, looking at GU going into the rest of the week and whatnot, I'm still bullish on it. Now, where we're looking at it though, it's, you want to be careful with buying, because we're going to be expecting some type of pullback. It's very hot on the RSI. It's been sitting up very high, hits this level multiple times, 3 times at 3 different levels, one level there, one level there, one level here, and it hasn't dropped down yet. So that's kind of what, expecting for it to drop down and pull back inside of our moving averages somewhere inside this area. And then that's when I would look for that drop down and then look to take it back to the upside again like that. So that's like what I'm looking for on GU, and it's like the same thing on EU. And then looking at UJ being the opposite, of what we're looking at of EU, GU, and our regular pairs. It's the only reason that I kind of look at UJ and UCAD sometimes as reference, just to get that, I agree with my correlation. And if I'm looking at UJ, I see a potential short-term pullback with UJ, maybe inside this area, somewhere inside this area up here where the moving averages are at. And we also have a gap on the smaller time frame from market open, but I see it pulling back inside of there and then just continuing to end up dropping lower from there with USD JPY. So does that kind of make sense? And then just like I said, looking at UJ, if you look at the daily's been dropping the 800 moving averages all the way down here. We have all these lows of where the market can come push down and drop into. So I see realistic targets as far as the sell with UJ, and then it's the same thing with looking at like GU and EU with the buys. I see realistic targets with GU with the buy. It's just a matter of finding a good pullback, getting in that trade, and then where do we want to take this up to? We want to take it back up to this 800 moving average, which is also the high of, what is that? The high of the year, I think, as well. This is the yearly high. This is January right here. So the yearly high is right at that 800 moving average. So we see that we pull back to start the year off, the first couple months, and now we could be looking at that potential move back to this 800 moving average up there with GU, or that's EU, sorry. And then looking at GU though, very similar, same setup. Looking at the daily time frame, right? We getting all that crosses right here, 5 and 13 cross, 5200 cross. Where's your next stop at? Take out these highs, take out like this double top right there, take out those highs, and then you're going to take that to, you take that to the upside right there. And that's where we'd be looking to, exit that trade. And these end up being potential holds. You find an entry that ends up being a potential hold for, a longer amount of time. Let me plug in my computer before it dies. Okay, cool. Anybody have any questions with the moving averages or anything that we just looked at? What is this? Anything we just looked at as far as the moving averages and kind of idea of what we're looking at going into the week, and just long term, honestly, more than anything. If not, then we'll kind of just advance into the next stage of all that, and that's just that ties into using your bank levels. Now, once you incorporate your institutional levels, now you're able to map yourself out your trades and map yourself out your your entry and exit points, and know how many points you're risking and how many points you're potentially gaining with that move. So all we did right now was add in the add in our bank levels in the background. Now we know that these are just psychological levels. It's just the same levels. Everybody will have these same exact levels on your phone, on your screen, whatever it is. It's not something that's opinion based, right? So now when we look at these levels and we look at the same exact, concept, same exact move that we were looking at last week and looking at it today, or just looking at it with your bank level perspective, what do you see now? Now, what do we see? Now we start to see, where the key levels are at, where the market was hitting off of, and exactly what is going on, right? Let me see. Do we got any questions in the chat? Are we good to go? Are we good to go? All right, cool. So, like I said, I mean, just incorporating everything, right? This is why it's important to have your checklist, important to, just having your checklist, because if we look at like that move last night with GU, or, this morning, whatever it is, that move right here, what do you see happen? Where's this 800 moving average also at? It's at the 50 bank level. So when you go down to the 15-minute, and if you're looking to potentially get in this trade last night, it might be, we know that the 50 institutional level is like a 50-50 moves in a sense, but you typically want to just be going with the trend. So if you got in this trade and okay, I usually risk 20 pips, this might be 30 pips to my next level that I might have to risk, in case of some type of stop hunt. But if you know that you might be risking 30 pips, you just go in with a little bit lower lot size, you get in that trade, and what do you have? Then you start to get your confirmations, you start getting your crosses, and you might enter that trade again going into New York session, or you just found a really good entry and now you just ride that up. And it might be a lower lot size than what you usually, use, but it makes up for it. Like, it makes up for it. It gives you that ease of mind. You're not overthinking things. And the biggest discipline is just not entering the trades, too many times after you find a good entry and a good position in the market, because that's when the greed sets in. And typically people are, people typically are profitable on the first or second trade, but it starts to be that third, fourth, fifth, sixth setup that you're looking for, sixth entry that you're looking for, that third, fourth, fifth entry that you're looking for, that you end up losing money, and then all the profit that you were in, it just dwindles away very fast. So, already, like I said, just incorporating your bank levels and looking at these levels and where the market is coming from, and looking at this same exact chart, you just start seeing, where you can start taking advantage of the market, and you just want to start trusting your trades. It's 20 pips in between these two levels, between the black and the red levels. It's 20 points in between those levels. So, if you get in somewhere around that red line, whether buy or sell, you're going to be risking about 20 pips to your next, 20 to 30 pips to your next level based on your entry. So that should just allow you, like I said, to lower your lot size and just practice getting in trades and right in the direction of the market, right in the direction of the market. So that's what we're looking at mainly for UJ. UJ, I'm still looking to short UJ long term. Still looking to buy GU and EU long term, but I do think at least even like to start this week off, we might get some type of reversals, and that's just going to allow us to, like these nights last, like not even a full reversal, but just that pullback drop to the downside and give you a good bullish play. If I don't find a bullish play off of Asian mid or Asian low, clearing out Asian low like this, or, potentially off the middle of the Asian session, then I'm just not going to look for, a buy. And really preferably, I really would like, that push down towards Asian low going into London session for me to find, find a buy entry. I don't necessarily like taking trades when we open the market up during London at 3 o'clock in the morning or 4 o'clock in the morning, whatever it is. And that's Asian session, the market moved, it escaped the box. And then we open up the next box right here for London in the same spot. I don't like these are bad trades for me. I don't like taking trades like that. I'd rather wait till New York session to trade. But if we're Asian session consolidate, then the market moves up, it moves down. And then now we open London session right here or something like that. And now this is our next box. Now, what do I want to, now I'm going to look for that potential bullish play to take it back to the upside and take that move like that. But these trades, these days like this, when the market is all sideways from 5 o'clock to 12 o'clock, or, more so not even 5 to 12, you want sideways between 5 and 12. But if the market is sideways all the way from 5 to 3 a.m., then I'm typically just not going to trade London session because the volatility isn't there and it hasn't done. You're looking for a power of three. We call it the big three, the power of three, whatever whatever you want to consider it. But this is what you want to look for. And if you can't identify these three things going into London or New York session, then you don't want to trade. Simple as that. Like if you can't identify it, then it's nothing, then you want to go look for a different, you want to wait for a different setup, not even go looking. Because that's the last thing I want people to do is to go looking for setups. Like you don't go looking for setups. You find your pairs and you wait for the setup that that you want. It might happen in a day. It might happen in 2 days. But when you find your setup that you want and you're confident in it, it just makes trading that much easier. So back into the power of three though, right? The power of three is three things: consolidation, manipulation, and distribution. You don't trade consolidation. Consolidation, we know between 5 and 12 o'clock Eastern, we don't want to trade that ever. Manipulation typically is between 12 and 3 o'clock because London is pushed back an hour. Now we can almost expect consolidation to be almost all the way up until 4 o'clock. So it's like that same thing. I think I don't know if it's going to be from 5 to 1 o'clock now is the midnight cutoff. Is the midnight cutoff at 1 o'clock now? It is at 1 o'clock now, huh? So yeah, the midnight cutoff, it would be at 1. Actually, I have to go look at the calendar again. But regardless, London session opens at 4 o'clock Eastern now. So you want to be as disciplined and as patient as possible until that around that 4 o'clock time to really be entering your trades for London session, because everything after 12 o'clock, everything in between that is going to be that manipulation. And yes, you can make some money in that, but a lot of the times it's going to catch you up and you're going to be in the wrong, you're going to be in the moves that you're going to be in the moves that you don't want to be in. As simple as that. So that is that's looking at our power of three, and then the distribution comes during your session time between 4 and 5 o'clock. Between 4 and 6 o'clock, the first hour, 2 hours of London is when you're going to find your distribution and find your setup for for that session. Now going into New York session, it's that same thing. You're going to still be looking for a power of three, because after London session is done and London opens up, it will go into consolidation going into New York session as well. And that's why you don't want to trade in those middle, in those dead times between 5 o'clock, 6 o'clock Eastern. You don't want to trade all the way again and look to enter any trades until 9 a.m. at the very earliest, because everything before that is going to be manipulation. You're going to see the 8 a.m. manipulation, because that's when the banks open up on the East Coast, but the stock market doesn't actually open until 9:30, which is why we say wait all the way until 9 o'clock to really trade in the morning, because it can look beautiful at 8 a.m., but then literally at 9 o'clock, 9:30, everything that looked beautiful at 8 o'clock will just, can completely take you out. And then you'll be staring at your chart for 3, 4, 5 hours, for nothing, in a sense of, you could have just waited until 9 o'clock and, looked at your chart for an hour max on a day. So that's just like that all plays into the mental thing of trading, and it's a snowball effect of you look at your charts too early. Now you're looking at your charts for 2, 3, 4 hours, and when then London or New York actually opens, and now you're too tired to actually trade. You're too tired to look at the chart, but mentally in the back of your head, that this is the best time to trade, and this is when the market is going to be the most volatile. And if I'm going to enter a trade at any point and go to sleep, I should be entering a trade at the right time, not going to sleep 2, 3 hours before London opens in the trade, and then just thinking that you're going to wake up at 8 o'clock in the morning and be in deep profit, and that, you just got the best trade ever. That's not how, it works. That 3 o'clock, 3:30 will really humble you. And same with 9 o'clock, 9:30 in the morning. It will really humble you that you've been trading since 6, 7 o'clock in the morning trying to find profit. And then 9 o'clock, 9:30 just it eliminates everything that the market was doing previous to that. And that's just part of the manipulation and the distribution that the market does on a day-to-day basis. So that's looking at GU. EU is very similar. We looked at EU just on a longer term basis. If you're looking at EU last night, it was that same thing. It gave out some decent plays, right? Now, it didn't happen when we really wanted it to with London session. It didn't go and clear out the top, but what did it create during London? created a double top right there. That's money sitting up there. We know that money's sitting there. And what does it do? They drop down during London, and then going into New York session, what do you see happen? It clears out those lows. And don't be scared, don't be scared to take a trade if it's not 9 o'clock yet. I'm not saying, you got to always wait all the way till 9 o'clock. The setup is the setup. The market is going to play based off of the setup. The time is just going to take you to where, the time is going to take you to where the market needs to go. But the setup is going to play off based off of the setup. So if you see a setup potentially playing out, like I said, take an entry, just be smart with it. Have your game plan mapped out, know what you're risking, know what you're going for. And if you have trouble looking at that on a blank chart, what should you be using? Your institutional levels, right? Because now if you look at this same screen with your institutional levels, what happened? It dropped down, it cleared it out. Where did it hit? It hit the 50 institutional level. So if you did want to get in this trade and risk about 20 or 30 pips, you know where you would have your stop loss at, right? At this institutional level right here, which is also, and for it to hit your stop loss, it would have to break through the 200, drop all the way down to the 800. And then, at that point, you would have just been in the wrong trade. But like you said, that's the point of using a stop loss too. But even just using your stop loss and having your trade mapped out, because if you want to risk 20, 30 pips after it clears out that Asian low, and that you're in a bullish market, your RSI is telling you that the market is oversold, it's going to pull back. You can never dictate how strong the pullback is going to be. But all you can do is, follow your strategy, follow what you know, and then just ride the market, ride the play. So if we're looking at that, right, if you get in this trade here, and like we said, you got in this trade, let's look at what it looks like on the 1 hour time frame too. Where's the 800 at on the 1 hour? Bam. Or this might be the one we just looked at, right? Or is it GU? GUE, they look that similar. I think it was GU though. But we look at that, bam, on the 1 hour, you go to the 15-minute, that purple box is your 800 moving average on the 1 hour. What's your 15-minute telling you? Bullish still, buy. That's a buy. That's telling you buy. 5 and 13 are telling you short-term sell. And where's your short-term sell take you from? Your short-term sell right there, when a 5 and 13 cross and go bearish, where does it take you? Take profit, one hit. And where would your second take profit be? Asian low. And you're out of there if you got in a sell. And then what happens right after that? Sellers get out, smart sellers get out, and then the buyers continue pushing it back up. So they sold it off. They sold it off to buy it back up at a better price and then continue that move. And that's that same move of it clears out the low, and then it goes and it takes out the high. So, that's just looking at different examples. That's looking at different examples. And just like like I said, it's an EMA training, it's a key levels training, it's everything. Nothing changes on what we've been doing for the last 2-3 years. It's just a matter of not even perfecting it, because it's a consistent work. It's a consistent skill that you have to work on to be able to keep it. But just you have to remind yourself of what I should be looking at, having your checklist, being in the right mental space to trade and all those type of things. And just making things simple, right? Lower your lot size. Don't over leverage to where you're freaking out about the money and that you're just staring at the chart the whole time. You want to be able to get in your trade, have your stop loss set, have your take profit set, and be able to walk away for 15 minutes, 30 minutes, an hour, and just know that, I trust what the market is doing. I trust myself more than anything. I trust that I took all my precautions. I did everything I was supposed to do. I checked this off. I checked this off. I checked this off. And I'm going to take this trade. And, whatever happens, I'll live with the consequences. So that's just my, that's my spill for the day. I don't want the call to be too long. Honestly, we don't have, it's nothing to overdo. Talked about our moving averages. We talked about our time and price, when we should be trading, when we shouldn't be trading. The biggest thing is just the execution, waking up on time, being up on time, and, and just being active on the charts. So if anybody doesn't have any questions for the day, then I'll go ahead and, get ready pretty much to wrap up the call and end it. I'll post a recording for everybody that wants to, if you want to go back through and watch it. But we all know, the most important thing is just being up on time. So do whatever you got to do between now and London session to, to be up later. So that's everything for the day, you guys. I appreciate you guys for hopping on and taking the time to hop on, with me. I know we haven't had a call in a couple of weeks, so it's good seeing, you guys hopping on. I'll be posting some updates and everything with the group and whatnot. I know it's like we haven't had calls for a couple of weeks, and some people have messaged me about their monthly coming up in a couple of weeks. I'm not worried about charging you guys or anything like that. I took off a couple of weeks because I had to deal with some stuff. So I'm not that's like the last of my concern. Like after this month, everybody that signed up at the beginning of the year, then we'll just keep going and we'll figure it out from there after that's over. So don't worry about that. You guys are the group, you guys signed up, you guys committed to it at the beginning of the year. And I know you guys are serious about it as anybody in the mentorship. So I guess this call was open to everybody, but only people that joined us, people that are in a live trading group too. So it's funny how everything plays out, right? It all works out how it's supposed to. But that's that for you guys. I'm not going to talk your ear off. I appreciate you guys for hopping on. I don't see any questions in the chat. So if you guys got any questions, feel free to hit my DM. I got a lot of DMs to respond to. So, just feel free to hit me up. I'll get back to you by the end of the day. And I will see you guys for London. I didn't release a live trading schedule, but, we'll plan on getting on for London and New York throughout this week. I just got to figure out my trading situation for the week too. So I appreciate you guys, and I will see you guys later tonight.